the automated nature of it, how decentralized and basically just like a really like a well-oiled clock, basically. And like a lot of people, I had to have multiple kind of interactions with Bitcoin before I appreciated the innovation that had happened here. And so, I first heard about it back in like 2010. I had a friend that could mine it on her computer with a high-end graphics card. And a lot of people, they dismiss it, whereas I actually never dismissed Bitcoin. Every time I heard of it, I was like, okay, that's neat. That sounds like it's pretty cool. It's like this kind of weird self-referential automated process. And I always thought, maybe I should mine it. Maybe I could do that. And I just kind of didn't get around to it. And of course, then you can't do it anymore. And then, I would see it again, and it's like, $600, and it's making news. And at that point, a lot of libertarians were on board with it. So it was like this, kind of libertarian money. And I was like, cool, like, good luck for them. My concern was that, I was like, can't you just copy this? And can't, why, how do you know there's not going to be a better one? And so I was always kind of like not super optimistic about ever becoming a large thing. Like I didn't really have a strong opinion that it wouldn't, but it just kind of wasn't asserting itself on my radar until I kind of kept seeing it pop up. And I think for what really kind of finalized it for me was seeing the resolution of the block size war, which really put the decentralization and immutability of the protocol to the test. And I think it passed that test pretty well. And it kind of showed some of the market dynamics around who has the power in the network. And so that degree of credible decentralization and immutability combined with network effect analysis made me start taking the network a lot more seriously, especially because a lot of my research is kind of looking at how financial markets are kind of broken in many ways. And so I just kind of view this as like the next step of technology to fix some of the issues that we have with money. Let's say that what Satoshi invented was he basically recreated, commodity money, but in digital form. And so, if we go back long enough, back when people used gold or other commodities as money, that proof of work, that energy input is really what made it rare, right? So in order to get gold out of the ground and in a form we can use, you have to go through tons and tons and tons of rock. First, you have to find it. You have to find a deposit. Then you have to all that development, all that effort. And when you have a gold coin or a gold bar that you can verify, that's essentially proof of work. It was proof that a lot of work was done to make this in this pure form here, and it's not something that anyone can just go and just create more of. It's very, very hard to do so unless you find like a new continent that's just got all these untapped resources and things like that, which happens obviously very rarely. And so you have this very low inflation rate of gold, and it takes work to get each ounce out of the ground. And obviously over time we shifted more towards fiat currency where money creation has no cost. It's basically it's got kind of artificial scarcity attached to it because there's various rules for how money can be created between the banking system and then certain actions from the government and the central bank. And there's kind of that kind of fragile but kind of well-oiled ecosystem there, kind of keeping the wheels on track. In some countries better than others. Obviously, there's a pretty bad track record as you go out more and more towards periphery countries. And what Bitcoin does is basically reasserts money that requires an energy input that is hard to make more of. And that basically when it exists, you can verify using that proof of work that it is what it is. But then more importantly, it's also in addition to creating new coins, the proof of work also goes into verifying transactions and basically adding new transactions on the blockchain, and represents the basically defense against double spending on the network or trying to censor the network. And so the more energy that goes into the network, the harder it would be, or the more cost it would be for some sort of entity that doesn't want Bitcoin to do well or wants to steal from recent transactions to go in and either censor it or do a double spend and reverse a lot of the recent transactions. And so one way I describe it is that what Bitcoin basically is a decentralized transfer agent and registrar. So for example, if you have a company and its shares trade hands, right? So the company uses a transfer agent to keep track of these shares moving around and who owns it. And of course that external entity is different from the company themselves, but it's a centralized entity. And what Bitcoin essentially does is uses energy in the input to keep track of this ongoing global decentralized ledger that we have. And so basically it uses energy to minimize, almost eliminate governance. Basically there's still some degree of governance about node operation and mining operation, but because you've automated it so much and you've used energy as kind of the arbiter of truth, it's basically about as, a governance minimized system as we can conceive of, that anyone running a node has. So the ledger doesn't exist on some specific cloud. It exists on tens of thousands of computers around the world, which is what makes it, very hard to eliminate. And every time a new block is added to the blockchain, that adds a bunch of thousands of new verified transactions. So if I want to send Bitcoin to you, we have to make sure that gets in a block, either the next block or some future block. And what each block does is it leaves behind a puzzle that the next block has to solve in order to attach onto the blockchain. And basically the way that that's solved is by guessing over and over again. And your ability to guess is relying on processing power, which is relying on electricity. And so it sounds wasteful at first, but that process is what decentralizes it and what makes it, very, very hard to corrupt. That there's no central authority that it can decide, what blocks are going to be added, who gets to add them, who gets in there. It's this very, democratized system where anyone who's sending transactions is offering fees in order to get into the next block. Miners around the world are keeping track of that queue, and they're trying to find the next block. And then when a miner does, they go ahead and put the high fee transactions into the next block and put that on the blockchain, and then that starts the process all over again. And the reason it's called proof of work is because basically when you go back and look at the blockchain, which is over 750,000 blocks by this point, over 13 years of operation, you basically have this proof of each one is shows how much kind of processing power went into it to get that block. And so if you were to recreate a longer blockchain, it would take years of running processes in order to have that longer blockchain. Whereas if you use a proof of stake system, which they might be useful for other purposes, but they're less kind of resistant to critical errors or self-correcting, because basically they're relying on circular logic. It'd be like if a company was serving as its own transfer agent or registrar, where the shareholders decide who the shareholders are, essentially. And so in that type of system, you eliminate the energy component, but then you put in more of a governance component. And so there's different models, but what makes proof of work interesting is that it's self-verifiable. So with proof of stake, it's costless to create an infinite number of copies. And then the question becomes, what is the real ledger? What is, the official canon ledger? And so it kind of comes down to a, majority decision, more or less. Whereas in Bitcoin and proof of any sort of proof of work blockchain, the longest chain that follows the rules is the canon chain, and it's self-verifiable. So no matter who gives you that blockchain, your node can verify that, yes, this is the longest blockchain I'm seeing. It follows the rules, and therefore it's the one I'm going to use unless I find a longer chain out there. And so it's basically the best we have, the best we know how to make a decentralized ledger.